Holy smokes everyone, something very strange is happening in the markets right now. In today's video, I'm going to go over the huge reversal that happened in the markets today, why it happened, and I'm going to go over why this sell-off is only just beginning and it's going to get much worse everyone. But I'm going to show you with facts and data and indicators that have proved every time the markets hits these levels, I'm going to go over looking at history how much they actually fell. We've also got some huge news today that shows what's happening with the economy and what's happening with consumers and companies' earnings. So everyone, this is going to be a good one. Let's not waste any time. Let's get straight into it. Okay, so first things first, before I get into the markets, look at this everyone. US jobless claims rose to 286,000 last week. So this new data shows that the economy is slowing. And it's not just due to the pandemic, it's due to weaker consumer sales, which I'll get into in a moment. We're seeing retail sales dropped 1.9% in December. We're seeing people's savings are being wiped out. We're seeing people's credit cards are at all-time highs. Consumers just don't have any more money to spend now that all the stimulus is dried up. And this is more proof to show that consumers are hurting everyone. Netflix shares fall 11% on slowing subscriber growth. But it's not just Netflix everyone. Look at this. Peloton shares plunged 27% after leaked company documents reveal it will temporarily stop production of its bikes, treadmills due to declining demand. But let's look what happened to the huge reversal in the markets today. Now during the middle of the day, it looked like the market was going to be a great day. Dow was up, the S&P was up, the Nasdaq was up about 2%, but then all of a sudden, like we've been seeing over the past 5 days, there is someone or some entity doing huge amounts of selling pressure right at the close.
Don't beat.
Listen to this, Dow falls 300 points and gives up earlier gains as Wall Street struggles persist. And I'll bring up a chart here, we can see that it did have a great start to the day, but when we can look from the peak to trough, it fell 2.26%. Again, same with the S&P 500, it looked like it was going to rally, but then it fell 2.5% from its intraday high to its low. And the Nasdaq just keeps getting smashed and it's looking like the Nasdaq could be heading for a bear market. It fell 3.3% from its intraday high. This is a very different stock market we're seeing today compared to 2020. In 2020, every time there was a little 1% dip, people were like, buy the dip, go all in.
Here we go, come on, push it, buy the dip.
YOLO, diamond hands, hodl. But it looks like all the people that diamond handed on all these retail stocks got wrecked.
Stop it. Get some help.
But what you're probably wanting to know is, will it get worse? What can we learn from history that shows what is going to happen in this kind of environment? Let's have a deeper look. Look at this everyone, and this is what's going to be coming, margin calls. Like I keep showing this, margin debt is at record highs. And when we look at the dot-com bubble, when margin debt falls, the stock market falls. Now what's going to happen in the Nasdaq is, once we get a fall of 20% or more, we may start seeing people get margin calls. And like I've shown you previously, 40% of stocks in the Nasdaq have already crashed 50% or more. Again, it's not just the Federal Reserve that's causing this crash everyone, it is valuations. Look at this, the Warren Buffett indicator shows that the stock market is now 211% of GDP. This is 64% higher than the long-term trend, and it is even higher now than the dot-com bubble. So this shows that a big crash is possibly coming and coming soon. And like I showed you before, the S&P 500 Shiller PE ratio is at 37. But look what happened in history every time this indicator passed the level of 30. What's far more worrisome is that the S&P 500 has declined at least 20% in each of the previous 4 instances where the Shiller price to earnings ratio surpassed 30. Wall Street simply doesn't have a good track record of supporting extreme valuations for long periods of time. So what you're probably wanting to know is, okay, but what does all this mean in simple terms? Well, what this means is the economy is weakening right when the Federal Reserve is about to start hiking interest rates. So this is a very bad combination, and it's going to be very interesting to see if the Federal Reserve does do a 180, which I wouldn't rule out. And what this also means is the economy right now is in something called stagflation. That means inflation is actually higher than the economy is growing. Say for example, if GDP is 3%, but inflation is 7%, in real terms, people, we are already in a recession. We're already seeing with wages, people in real terms are actually getting pay cuts. And while the stock market was so euphoric in 2021 and people were saying valuations don't matter, well, in an environment when the money printers go off, valuations do matter. And all these indicators are saying we could see at least a 20% drop in the S&P 500. But this all depends on if the Federal Reserve will keep their word and actually fight inflation and lift interest rates. Because like I didn't believe them when they said inflation is transitory, I won't believe that they are going to start lifting interest rates until they do. So that was just a quick update with what's happening in the markets today. What do you think? Let me know.